Welcome back to CRIF Talks, Real Stories, Real Impact. I'm Rahul Desai. Today, we are joined by Managing Director and Chief Executive Officer of Ujjivan Small Finance Bank, Mr. Sanjeev Nautiyal. Ujjivan has been a pioneer in leveraging technology to drive growth, particularly through their implementation of Business Rule Engine. Their journey from microfinance institution to small finance bank showcases how digital transformation creates sustainable competitive advantage. Mr. Nautiyal, thank you so much for taking time out. As an architect behind the digital initiative, what prompted this forward-thinking approach?
Thank you, Rahul, for giving me the opportunity to talk about the digital tools that are available. It began with a simple question. How do we bring banking to the unserved and underserved without compromising on credit quality or operational efficiency? At Ujjivan, we recognized quite early that this wasn't simply a matter of branch expansion or manpower. It required a complete rethinking of our operational architecture. Traditional banking, as you know, has models which create an inherent trade-off between inclusion and risk management. The business rule engine actually optimized credit underwriting by minimizing human intervention and improving loan turnaround time by allowing us to codify expert judgment, apply it consistently at scale, and continuously refine it based on performance data. This wasn't just about technology adoption. In fact, it was about reimagining what inclusive banking could achieve in today's digital age.
I remember Ujjivan was among the first to adopt the Business Rule Engine. If I may ask, what strategic vision and planning enabled you to digitize ahead of most of your peers? How has ongoing maintenance and vendor collaboration contributed to maximizing the impact within your technology ecosystem?
Rahul, we identified early that manual credit processes wouldn't scale with our growth ambitions. When evaluating the business rule engine, we saw three immediate benefits. Number one, consistency in decision making. Number two, reduction in turnaround time. And number three, the ability to rapidly deploy new products. Our implementation succeeded because we approached it as a business transformation, not just as an IT project. We assembled a cross-functional team with representation from credit, product, risk, and technology. This team mapped our existing processes, identified bottlenecks, and redesigned workflows to maximize automation. What differentiated our approach was our metrics-driven implementation. We set clear targets, say 60% reduction in decision time, 100% policy compliance, and ability to make changes in credit parameters in weeks instead of months. These metrics guided our configuration decisions and helped secure buy-in across all levels of the organization. The tangible results came quickly, as early as in year 2016, when we implemented Business Rule Engine for microbanking credit underwriting. Our turnaround time for microloans dropped from 48 hours to just 4 hours, which transformed our competitive position in the market.
With in-house resources, Ujjivan configured most of their products and variants. Today, about 80% of your retail business runs on Business Rule Engine. How did you accomplish that?
Rahul, we developed what we call our configure, test, refine methodology. Rather than outsourcing configuration, we invested in developing deep expertise in-house. This began with intensive training for a core team, who then became internal champions. Our approach targeted high-volume products first: microbanking loans, two-wheeler loans, and home loans. For each product, we created standardized rule templates that could be quickly adapted for variants. A key insight that I would like to give is we built a parallel testing environment where business teams could simulate rule changes and see their impact before deployment. This actually dramatically reduced implementation risk and accelerated our learning curve. We also employed modular approach. Complex credit decisions were broken down into discrete components: eligibility, income assessment, risk scoring, pricing. This actually allowed us to reuse components across products and improve them individually.
What's interesting to observe that Ujjivan always kept pace with Business Rule Engine upgrades. How critical were these timely upgrades for your success?
Absolutely fundamental, Rahul. We view each upgrade not as a maintenance cost, but as a competitive opportunity. Each new version brings capabilities that allow us to serve our customers better. We've institutionalized a periodic technology review where we assess available upgrades against our strategic roadmap. This ensures we are always leveraging the latest capabilities that align with our business needs. For example, when the previous upgrade or the version introduced the multi-scorecard functionality, we immediately integrated it to create segment-specific risk models. This allowed us to configure statistical scorecards and use them in credit decisions. Another example, the API enhancements in the subsequent version enabled us to integrate with fintech partners, creating an ecosystem that drives customer acquisition through non-traditional channels. Our credit team and technical architecture team deserves credit for designing a modular implementation that minimizes upgrade disruption. We typically complete upgrades over a weekend with minimal business impact.
As Ujjivan transformed from MFI to a small finance bank, how important was digital transformation for scale and market expansion?
It was the key enabler, Rahul, of our transformation. The shift from MFI to small finance bank meant expanding from a single product to a diverse portfolio serving multiple customer segments. Especially in automation of credit underwriting, the business rule engine formed the backbone of transition in three critical ways. First, it standardized decision making across our rapidly expanding customer base and branch network as well. Branch staff didn't need deep credit expertise. The engine actually embedded that knowledge into the workflow. This allowed us to expand our business systematically without compromising credit quality. Second, it enabled product innovation. As an SFB, we needed to launch multiple products very quickly. The engine allowed us to deploy new products quickly, helping us gain market share in competitive segments. Third, it created a data foundation that improved our understanding of customer behavior. Every decision generates structured data that feeds our analytics, helping refine our targeting and also risk models continuously. The impact is very evident in our numbers. Our loan book has grown threefold since becoming an SFB, but our credit underwriting team, especially in micro banking vertical, has only expanded by 30% or so. Our 30 plus day delinquency rates are among the lowest in the industry despite this rapid growth.
Thank you, Sanjeev, for sharing this valuable insights. Ujjivan's journey exemplifies that how digital innovation powered by Business Rule Engine can drive real impact in financial inclusion and operational excellence. To our viewers, this has been another episode of CRIF Talks, Real Stories, Real Impact. I'm Rahul Desai and we'll see you next time.